Hi everyone, this is Drew Wharton from Nimble Leader on behalf of Bonnie Spade over at the MRC, here to speak with you about Vital Leader Roundtable. So without further ado, let's jump into our short briefing this morning. Vital Leader can help you and your team function with common purpose and drive. There are 4 areas that we're going to address today. First, we will run a few numbers, establish the key relationships that are germane to every business. Second, we'll touch on the business foundation, something I call the tools for profit. These tools are available to every leadership team. We'll then shift to the business market position, a key operating discipline that leaders need to master if they're to effectively shepherd their businesses to higher, more profitable ground. And then finally, we will explore the Vital Leader Roundtable, a way to build business acumen of cross-functional leaders together. In looking at the numbers, we want to keep it simple. Not everyone has the financial acumen of a CFO, and in this case, we'll start out with a simple P&L. I sell 100 units at $1 a piece, generating $100 in net sales. If my cost of sales is $60, I'm left with gross margin of $40. If I back out SG&A, selling, general, and administrative expenses of $30, I have $10 in operating profit. 10% operating profit is a percentage of sales. Now this business has an investment of working capital of $30. That would be investment in things like inventory and receivables. If I take a 3% price increase, my operating profit grows to $13. A 30% increase versus the base case. In essence, 3% equals 30%. Now that 3% price increase has the same profit impact as a 10% reduction in cost, a 12% increase in sales, and a 10% reduction in working capital. Now I know working capital doesn't impact operating profit, but it does impact cash. And so if I'm able to operate my business in the current year at $27 of working capital versus the previous year of $30, I've picked up an incremental $3 that I can reinvest in the business. Price is the most powerful tool for profit. And so it has a double-edged sword as well. Because if I cut my price 3% and I don't grow my business, my profit plummets to $7 or a 30% decrease. Often, during turbulent times, a field sales organization will say our customers are coming to us saying, can you give us some price relief? We're having a difficult time. We need your help. We've been working with you guys for 10 or 15 years or longer. And so that's a difficult decision to make, and you have to be careful. Because if I cut price by 3%, the reality is I have to grow volume 25% to achieve the same level of profitability, $13, as I would with a 3% price increase. Now conversely, if I take my price up 3%, I can actually lose volume of 5% in terms of sales and still grow my profit by 20% or $12 versus the base case of $10. These relationships are axiomatic to all businesses, to all manufacturers. And so in my mind, it's critical that the leaders understand these relationships when they make critical decisions that relates to how they're going to move their business forward. Now, whenever we work with a leadership team, in the back of our minds is something called the house of profit. Every business has one. At the top of the house is operating profit and cash flow. What does business kick off each year? Internal to the structure, you have the team addressing customer needs with products and services. They're managing business processes. They're managing financials. And then you have the foundation, the tools for profit, or the linkage between market position, what you stand for in the minds of your customers, and what you as leaders do to manage price, volume sales, mix of products and services, cost, or importantly, cash burn, the money that goes out of your pocket, and your short-term investment in working capital. Now, when it's sunny outside, it's a little bit easier to manage the business. I've worked with profitable companies that were incredibly profitable, and that profit covered a whole host of sins. And where the issue comes in is when you have a jarring downturn. Now my experience is when the market gets really, really tough, working capital goes up and cost goes up. We're not selling as much product as we did previously. Volume is going down. There's a pressure on price by the sales organization to be able to meet those volume needs. Essentially, the team is focused internally on stopping the leak, stopping the hemorrhaging, the leaking of cash from the roof to the floor. They're focused internally when they really should be focused externally, trying to manage a very dynamic and critical marketplace. Okay? And so really that foundation of the tools for profit is really critical so that when those winds come, the team is able to keep their focus on the external marketplace. They don't flinch, they don't blink, they don't cut price unnecessarily. They're trying to manage through very turbulent times. Now when you think about those tools that are available, things like price, volume, mix, cost, working capital, The first among equals is market position. That's what you stand for, your value prop. And if you have a strong value prop, your ability to manage pricing in a tough market, to manage volume sales, mix, the other tools, is a lot easier than if you have a commodity offering. Okay, and so whenever we work with leadership teams, we place a lot of focus on the statement of market position. And here's a simple exercise. I'll ask a team individually to fill in the blanks. Don't talk to your neighbor, take 5 minutes. To target customer, your company is a competitive frame of reference, and that's basically if they don't buy from you, who are they going to buy from? That does what? What's your point of difference? What's your value prop? What do you think happens when we post those statements to the wall? Well, normally, the answers are all over the map. I worked with a wall manufacturer a few years ago, did the same exercise. They had 12 different target customers, 8 different competitive frames of reference, and 7 different points of difference. Now, many combinations, in many respects, equals a lack of focus. Now, it's one thing when you're working together as a team and you get the issues on the table, you can work to get some consensus. But what happens when you're a leader, you're in the field, let's say, you're a sales leader or you're an ops leader, and you need to make a decision around how you're going to spend scarce resources and the team's not available? Well, what you're going to do is you're going to spend those resources on what you think is best in terms of how to move the business forward. You're passionate about the business. You want to see it succeed, and you're going to make that call based on what you think is necessary. The problem is if there's no clarity on value prop in terms of the position, you might spend resources in an area that are not consistent with moving the business forward, and that's equivalent really to burning cash. Okay? Now, somebody might come to me and say, thanks, Drew, that's a great theoretical exercise, but so what? Why do I really care? And whenever I get this question, I want to go back to the numbers and focus on the numbers because it's really, really important. So if we go back to that base P&L and we break out that 100 units for this company into product A and product B, and we see that with product B, they sell 10 units at $1 a piece for $10. And then they go through a rigorous market positioning exercise and they realize that the value to the customer of product B is actually $2. Where does that leave you? What do you do? Now, I ask this question, and then there's kind of a pause, and then somebody might pipe up and say, well, take a price increase. And I would say, yes, absolutely you want to take a price increase. The next question is, what is the amount of the price increase? Now, you might be able to take it up $2. That could be risky, but if you're a steward for the business, you want to manage risk. So maybe what you do is you take the price up 20%. So I take product B from $1 to $1.20, and my net sales grows to $12. Now, when I do that, total company combined profitability is $12 versus the base case of $10. And so what you've done here is you've generated a 20% increase in total company profit by only impacting 10% of the business. Now, in my mind, that's pretty smart. You're managing risk. And you've just taken a 20% increase in product B because it truly does have that kind of value. You haven't lost any volume. And then now what you've got in your pocket is maybe a potential increase for year 2 or year 3 to take it up again. Also, when you're driving profitability like this, the team is hitting their numbers, they can step back, take a breath, and say, how do I want to position this business for the future? And so having clarity around positioning, value prop, on your products, on your business is really, really key in terms of how you grow that business in the future. And so when we start out with the statement of market positioning, the fill in the blank exercise, it seems like a simple exercise, but if we have different leaders filled out based in the context of how they view the market customer, they're often going to come up with different answers. And so you have to kind of roll up your sleeves and step into more of a drill down. Who's the target customer? Are they influencers, purchasers, or consumers? Each one of those constituencies has their own perspective in terms of how they view your offering. And so you need to get some understanding of that to better inform you in terms of how you're making the decisions. From a dollar value proposition, are you economic? Are you low cost producer? Or are you functionally superior? Or people just buy from you because they like you and you've been working with them for a number of years? You want this understanding. So clarity around market position will have a huge impact on the house of profit and your ability to drive profitability and cash flow in the future. Now, if we shift to the Vital Leader Roundtable, we do is we bring leadership teams together on a monthly or sooner basis. What we want to do is set the stage, we want to assess the gaps for those companies, and then help you map your path in an effort to drive short-term performance for your business. So when we step into Vital Leader Roundtable, there are a number of sessions. In session 1, we spent a half day focusing on what do you stand for and why does it matter? How do you monetize the value prop? What does it look like? What are the impact in terms of how you move your business forward? It's a very, very important session. Once we clear market position, we step into another session on the tools for profit, and we want to have an understanding of the levers of performance and how they importantly impact profitability and cash flow, now that you have clarity on your positioning. In session 3, euphemistically, I say boring numbers question mark. There's some giggles in the room, but I really view this as incredibly important. It's the one language across all teams, all boundaries, and it's my belief that a leadership team, I don't care who you are in the leadership team, you need to have a base understanding of the numbers to be able to track your business. And then in session 4, what we do is we step into a positioning exercise with the different companies, the different teams, where you practice developing a positioning for your business. Now, initially what happens is you're all over the map, and then what we do is we say, look, your back's against the wall. Within 30 minutes, come up with a position right here, right now, that you all can agree on. Force yourselves to do that. And that's a great exercise because what it does is it helps balance the risk, identify where you need to do some work. But then when you come up with that positioning, then what we do is we ask for the other teams that are participating in the Vital Leader Roundtable to give you insights. And I found this to be a very, very powerful session because the teams that have been working with Vital Leader Roundtable, they've developed some camaraderie, and there are some great insights that can impact the teams in terms of their position. So we do a round robin in terms of getting input from others, as opposed to just getting input from, let's say, a consultant. You're getting input from a group of peers. Now, once we complete section 4, what we do is we step into session 5, which is a leadership team debrief. Now, the first 4 sessions are done within the context of all the companies. And with session 5, the leadership team debrief, we do it off-site at your company location. The information can be somewhat sensitive. Coming out of session 4, what we do is we have the leaders take the SHAPE diagnostic, online diagnostic. It takes about 10 to 15 minutes to complete the diagnostic. SHAPE really kind of pivots off of what we've just gone through during the Vital Leader Roundtable. And then we have another diagnostic, the agility diagnostic, which helps teams learn about what is getting in the way of them being more successful. And that's another 10 or 15 minute diagnostic. And so what we do is we compare the data of the CEO with the data of his or her leadership team. And what kicks out are the gaps. Where are the gaps between the CEO leader of the business and his or her team? And that really represents an action path of short-term steps that you need to take to make sure that you're aligned. What are you going to do next to bring greater clarity and consistency across the group? What we also do in the leadership team debrief is we cover a custom financial model where we can gain P&L outcomes using the tools of profit. And if you're going through this process and you've developed fluency around how you're going to manage price, volume, mix, cost, and working capital in relation to market position, it's one thing to be able to do that, but when you step into a strategy session and then you start to develop your initiatives, you want to game what those decisions are in terms of impact. So if you're going to take a price increase, you're going to manage your discount structure down, if you're going to cut your cost structure, what does that look like in terms of how it impacts your personal, your team profitability, cash flow, and balance sheet? And so we can develop a custom financial model for you to be able to do that. We've done that for other teams, and it's been very, very powerful in helping them operationalize what they just learned through the Vital Leader Roundtable. So hopefully that provides an understanding for you as it relates to what we're going to be covering. We'd love to be able to see you attend these sessions. If you have questions, please feel free to reach out to Bonnie or myself. We'd love to have a conversation with you, see if we can fill in the blanks. And again, we hope to see you at our next Vital Leader Roundtable. Thanks again for your time. Take care.